Apple is holding a huge pile of cash, maybe preparing for a recession.
And with Fitch and with long rates going up, if long rates go up significantly higher, Apple's going to get whacked. I think that's more important for the stock than the fundamentals right now. But in the long term, I think it's too cheap to write calls on, and it's too expensive to buy. So I think you're kind of in no man's land right now.
Well, you're also right at that $3 trillion market cap level. And depending on what happens on the call, that probably is the difference between whether it ends the week still above 3 trillion or below it. Does this level right now, this year, even matter so much? Does this iPhone cycle this year matter so much? Or, I'm looking at the gross margins, I'm looking at the services business. Does it really matter whether you get through this period with the loyal customer and, you're still relatively strong when the customer is ready to buy phones in volume again?
I think this year's a great example of how Main Street and Wall Street can disaggregate so strongly. You've had an unbelievable year for the stock this year, and for the operating business, it's been a really kind of ho-hum, very sleepwalking kind of exercise. It just is nothing very impressive at all. So I think we're going to enjoy the stock returns right now and wait for better growth in the future, which hopefully we'll get next year, because this year's been very mundane.
Okay, George, hang tight. Deirdre Bosa is back with us with comments from the CFO of Amazon. Dee?
Yeah, I just got off the phone with Amazon CFO Brian Olsavsky, and I asked him about AWS. And I think the big question for Wall Street is whether growth has bottomed out, if that deceleration has happened and it's going to be, on the up again. He said the last quarter was a different circumstance. Growth rate had dropped during that.
Would not buy Apple at this price. Would you guys buy